This is the Norris Group's Real Estate Investor Radio Show, the award-winning show dedicated to thought leaders shaping the real estate industry and local experts revealing their insider tips to succeed in an ever-changing real estate market. Hosted by author, investor, and hard money lender, Bruce Norris.
All right, welcome everybody back for another round of What in the Real Estate. So we're going to briefly touch on a couple stories that have been going around. The one that we're not even going to touch with the 10-foot pole is going to be this major lawsuit that NAR just lost $1.78 billion on a class action suit in Missouri. So maybe we'll see how that shakes out, or after the 2 years of appeals, where it ends up. But that's what's been dominating the stories here yesterday for sure. There is a couple of things that one that came up at I Survive Real Estate was when we talked about commercial to residential conversions. The panel briefly touched on it. I think Doug was the one who talked about it a little bit, but there was a story this week that CDGB, there's going to be government grants that are going to be given now. So the government's going to be involved, and they're going to issue about $10 billion for the acquisition, for the rehab, and land to convert some of these. We'll see how that shakes out down the road a little bit more. But the other story I was going to tell you guys about was the story about moving back home to save money to buy a house, but it's a different spin. This story actually talked about actually purchasing the homes with family members. So maybe I'll touch on this a little bit, Craig. So it said 37% of respondents consider purchasing a home to live with a child or a sibling or a cousin. Is that a trend that you're beginning to see? People actually getting together with family members to actually buy the house?
That's a good question. Matter of fact, we are doing a build right now for a couple out of California that they are building a house for their mother is going to be moving in with them. And so, yeah, we're starting to see a lot of that, especially with the different races, different nationalities they're big in family. And so, we've got a lot of houses, some of our larger houses with more bedrooms. We are seeing to where they're bringing families with them, and moms, dads, things like that. They're moving in with them. So we are starting to see more of that. Is it a prevailing process in what we do, especially from a retail? No, but we are starting to see it.
With Florida too, you have the biggest number of seniors getting older. So that could definitely be in the future. Your senior grandpa moves in, he's got dough, you don't own the house, let's put us both together so he's safer and they have a home. Makes sense. In that, I mean, with some of the stuff that's going on with my parents and their health, we're prepping for them to potentially move into with us. So we built a suite for them that they will have a suite, and I praise God we're able to do that. But yeah, I mean, I would rather have my parents close to where I can help in their the last years of their life versus trying to do something else. So it's definitely a process. And I think what Bruce was saying, with the age of what a lot of our seniors are in the Florida market, there are a lot of families that are starting to move together.
Well, there was a story about a year and a half, 2 years ago that this was something that people were suggesting to put around schools, like have a senior coupled with students, and instead of paying rent, they would actually just do chores, do the shopping, clean the house, things like that. So it's a changing dynamic. The other day today's Fed Day. Today, the big announcement, are they going to rate? The rate's going to go up. So let's get into that story, because I think it's going to, it's certainly something that we talked about a lot at I Survive Real Estate, but so unchanged for the second straight time. They're going to assess again in December the additional tightening. Tighter credit conditions were something that is weighing on the economy, and that's what they took into consideration. And then they will continue to assess, the information. And what they're talking about is labor, right? There's still too many jobs available. The labor still, strong, GDP strong, and then the financial credit heightening, or it's tight. So that's why they didn't feel that a rate hike should be in the works for this meeting. But one of the things that they're still not confident that they've raised rates enough that they're going to get back to their target of 2% inflation. So is still their target, even as I listened to Jay Powell do his press conference. Now, Bruce or Craig, whoever, we have some new listeners that maybe don't truly understand that, what the Fed funds rate is and how it affects so many sectors. So can you explain that for a little bit?
Joey, I'll deal with the kind of interest rates in general first and go back ways.
Okay.
And the accuracy of the Fed statements, let's put it that way. So from 1975 to 1980, interest rates basically doubled. So you had, mortgage rates go from 7.5 to 15 in that time period. What was interesting is affordability at the starting point was 55% in California. And that was the reason you didn't have price decline, because you raised it for 5 years and got to 17% after a 5-year journey of raising rates. Okay. So we were never at 17% before. And so this isn't the Fed fund rate necessarily. This is the mortgage rate doubling, but the Fed fund rate went crazy during that time. Okay. What was really interesting in 2022 and 2023, when we started raising rates, we went from where we were 22% to 17% in 4 months. So you reach that breaking point for real estate payment in 4 months of your raising interest rates. And that's why you're kind of buried at those numbers. So when we do that moodometer, every time you do that chart, we're at 70%, right? Well, that's completely a ridiculous payment that usually is accompanied by a euphoric buyer. And this time it's really a math quotient. In other words, that's just where we are. And the only reason we're able to maintain that price is there's still more buyers than people willing to sell. So you don't have to be a euphoric buyer. You just want to be a buyer, and you're butting your head up against there's really no available inventory from the guy that's got a 2 or 3% mortgage. They just want to sit there, and who can blame them? So that's an interesting thing. But let's talk about the accuracy of the Fed for a second. So, I mean, these guys all have PhDs in economics. Their ability to see forward isn't so hot. So just to give you an example, in 2007, the fourth quarter prediction for GDP growth for 2008 was 1% positive, and it was -4. So that's a big spread to get wrong. And the Fed fund rate went from wherever it was to 0, basically, because they completely misjudged the catastrophe that was about to occur. In the current situation, we heard the word transitory constantly until we didn't. And then they raised rates faster than any other time in history. In a very short period of time, we went up about 5 percentage points and got to the point we're at now. So it's hard to look at people with PhDs and think, okay, why aren't you as accurate as like a common? I think like Craig is he's got his boots on the ground watching the events. Sometimes that's a better teacher than a PhD, apparently, because you have a sense of the market. So I can tell you the other thing, though, when they do a policy shift. So, okay, wow, we've overdone it, let's say, and now you have unemployment and you have negative GDP growth. The decline of interest rates it's not small, and it's not slow historically. So that'll be a really interesting play on this real estate market whenever that day occurs, where it occurs to them, okay, we've misjudged the downside now. It'll be very interesting to see the reaction of the buyer and seller in real estate. So Craig and I had talked about this. You give this market a 5.5% mortgage rate. Who comes off the sidelines the most? The seller with the 3, or the buyer that's been looking at 8? And I think it's the buyer looking at 8. This is maybe their last chance at 5.5. and the seller still going, that's almost twice as high as what I've got. And so maybe they just stay. So you still have that really odd thing going on. You've got more buyers than sellers. And who benefits this is the new home builder. Because it can land on he's the only plane it can land on.
So the interesting thing, or one of the things that I thought was very interesting that Powell said right before I jumped on, he had not, and their committee had not taken into account any recessionary issues. There was a question that came from a reporter, I believe it was at CNBC, was asking, had they, and I could be wrong who had asked the question, but they were questioning about what all had taken into account, in this determination for that, and did they take anything into account in relation to any recessionary issues in the current economy or in the future economy, and he stated that they had not. He said, I hate
the
to
word
say
recession wasn't even in their decision.
Exactly, and that's what he said. I hate to say, but he said everybody's going to see it as soon as they read it because it's in our wording. So he was dancing all around that.
Well, he opened up that answering that question by saying, "I don't want to answer your question, but I'm going to have to."
Exactly. So the interesting thing going, if I'm looking out today, Bruce and I've been talking about a few strategies on some stuff of properties that he's got, some of the stuff that we're moving, things like that. Interestingly, and Bruce, I believe you had talked about this quite a bit. We touched on the panel, but you were talking about this last Friday in the aspect of arms. And, back in 05, 06, 07, arms were being used and kind of thrown out as candy for anybody that just wanted to buy 10 properties. But the tightness of which people are writing mortgages now is very tight. But while the 30-year fixed money right now is about 8 1/8, 8 1/4. Right now, let's see, 5/1 arm right now is 6.04, and 10 is right at about 6.4 for a 10/1.
The cost to the seller is what?
So on a 10/1 arm, they're going to pay an APR on that of 6.4. With 2 points origination.
Okay, but what is the seller paying in points?
Seller paying that's the cost of 2 points origination and 6.4 on an arm.
And for 5/1 arm, it's no points other than 2 points. Rather, there's no.
This is not a buy down rate. This is just their arm.
I need your lender.
That's what
Well,
that's exactly why we're looking at. You and I were talking last Friday at lunch about looking at some of the rate buy downs. Why would I buy the rate down now when they can go and get 2 1/4 point discount from this, and they're going to save $650 to $675 on their payment? And they're also on a 10/1, they're going to be locked for the next 10 years, and they can get the rate drop if it drops over the next 2 years without having to refi. That's a phenomenal product.
I forgot about that. That actually happened to me after I refinanced my house at 17.5. It went down to 12 and I kept on getting a reduced payment. I was like, yeah. That's hilarious. Well, that is interesting because we were quoted some stuff today and it was much more aggressive in points. The numbers are right, 5/1 arm. Now, this is interesting about the mentality of a 5/1 arm. To me is a long time in the sense of, especially recent history. And even myself, do I think we're going to have a chance in the next 5 years to have that be a lower rate? And I'd have to say, yeah, I think there's no doubt about that in my mind. So I think the buyer who can get a 5.99 instead of an 8 and has 5 years to improve their position is probably going to think that's maybe a no-brainer if they really want in. And that's like you say, that's a big difference in the price point that we're talking about, say $700,000. That's a lot of money a month to not have to pay.
Well, recent history has told you that the velocity of both the rise and the fall has been not something that takes a long time. It's well within. I mean, you can see rise and falls within that 5 years.
Oh, absolutely. No, there's, I don't think there's an appetite to go back to like the 0% Fed fund rate, but the world doesn't look very stable to me.
Yeah.
So you can look at other things that cause decisions, right? Or cause recessions, cause concerns. So
Yeah, I was speaking to a group this morning, and Bruce, in that aspect of zero money, they were talking about, do I think that we're going to start seeing 3% money in 2024, 2025 again? I don't know that we see 3% money again in my lifetime. I mean, maybe, but there was a lot of extenuating circumstances to get us to 3% money and 2% money. Do I think we're going to see that 5 and 6? 6 pretty good, but do I think we're going to see low 5s over the next year? I think we could. I think that's a good potential that we see low 5s in 24, maybe first quarter 25 to get down to low 5s. But as you were talking earlier, once they start to fall, they typically start to fall a lot faster. And I love the charts that you brought out Friday night showing the cyclical value of how fast things drop, which, within that market, and then, what was happening within the rate side of that. But then once the rate started turning, again, that was one of the things that was asked this morning, what I think is going to, happen from a price damage. And basically I was laying straight out just what we talked about Friday night, that that rate issue doesn't necessarily mean price damage. And quite frankly, if we start to see a rate drop quite, pretty frequently, we've been very fortunate. The price of everything is pretty much flatlining right now. We're not seeing massive drops in pricing at all. We see just a little bit of movement down. And in this situation, you start getting some products like ARMs that start to make things affordable again. That we can put Mr. and Mrs. Smith in there that are we showed a house this morning. Our sales team told us that we had a house showing this morning to a young couple that was pregnant, baby in the belly. Mm-hmm. And so that's encouraging to see that. And they were specifically looking, they've been reading, and they're looking at an ARM product. So here's a young couple, pregnant, baby in the belly, ready to start their family. And they're looking at, this looks like a good time for them to buy. Because of what could happen with rates, and especially with an ARM product now that is affordable to them, they could get into that product and know that they can at least be solidified for a 5 or a 10-year period, whichever one they chose. Yeah, and the average length of time ownership is, it's grown a lot, but still, a 5-year journey is a fairly long time to own something. What's interesting about the 50 years worth of charts that we looked at the I Survived event. We had a methodical slowdown between 1996. We had a price crash in 08 and no price crash of any kind in 80 and 81. And the charts in 2008 were much better than the charts in 80 and 81. As far as the inventory for sale was like 8 months, not 22 months. And so the difference was, what was that inventory made up of? And so when you unpack that, it looks like to have really big price damage, you have to have an urgent, have to sell pile of inventory that dominates the value of every other property. And we don't have that. You're not going to have a bunch of foreclosures on houses that have payments less than rent. And the other factor about that is the timing of that price boom. That happened in a very tight time frame. At the end of 2019, prices were kind of flattening. They weren't going anywhere. All of a sudden, you have the coronavirus hit, and by the time you hit April, you all of a sudden you're off to the races for a year and a half. Well, the price in California went up 50% in that 18 months. So if you were a buyer, you had a very big equity position really fast. If you were just a buyer at the end of 2019, you had a 50% equity position or 50% price rise. You had a big equity position. And you also had a chance to refi.
So how is that pile of properties going to turn into a giant pile of foreclosures? It just is not. At the same time, rents went up. So your payments keeps on going lower because you're refining it and the rents explode. And now your payment's less than rent. So that you have the back end safety valve of saying, well, if I lose my job or I get transferred, I have a positive cash flow rental. I'm good. So I don't know how inventory is going to show up. And then where's the have to sell inventory going to show up? Is it the unemployed? So if it's the unemployed, they either don't own a home, which that isn't going to produce inventory, or if they do own a home, they have enough equity for it not to be a foreclosure, and they may have so much equity and the loan rate is so good that's a cash flow rental. The heck with it. I'll come back. I can move back, right? I'll go do whatever I do over there, and I come back and live in my house 2 years later. I don't think you could ever utter that sentence before, and now we're here.
One of the things I've heard you talk about is the spread between, the Fed fund rate and interest. Now, let's say for some reason we get to 8.5 and we're still pushing high. Is that gonna drag? Is that gonna force Powell's hand and say, well, you know what, we got to increase, because you've talked about the spread has never been this big, so which is going to pull the other, is the Fed fund rate going to pull interest down, or is interest going to pull the Fed fund rate up?
Well, I think what was interesting that was sort of above my pay grade was the discussion that was had about who's buying that. So that was artificially low because the Fed was buying that paper. And now they're not buying that paper. And so that spread has never been this high because you're having to have let's say a buyer that think that's in their best interest, as opposed to the Fed backstopping an industry that they just want to have interest rates lower. So I think the question really is, do you ever see an event where they step in and do that again? Are they going to come in and rescue real estate because it has an 8.5% mortgage? No, I don't think so. But I don't think we're headed that way. I think you're going to have some factors kick in where you have less inflation, some more unemployment, definitely have wage. Now, you do have these big union contracts that are making, bigger salaries. But Craig, correct me if I'm wrong, but over time, they have less buying power. So you can get a wage raise of 25% from McDonald's over the course of 4 years. And I will bet you money that during that cycle, you'll be buying less at the grocery store than you were before you got the raise. So that's not really a functional positive.
Yeah, in the last 3 months, we're spending more than we're earning, and that's just data. Now, the only way people really get it, so one of the stats that came out of this story was folks who stayed in their jobs got a 5.7 pay increase. The ones that left for a new job got an 8.4 increase in their wage because they left. Our dollar is stretched way too thin, and it was a recurring kind of theme on the panel, and I don't want to get too much into it because I want folks to hear it for themselves as it went, because it was a great night. So let's transition into that. I Survive Real Estate was another great event, well attended, and just the feedback that I've gotten from everybody has just been tremendous. So I wanted to get your guys' thoughts on a couple things, and either one of you guys can jump in, but I want to hear from both of you on this. Was there anything that you heard Friday night from the panel or from people that you spoke to that surprised you?
I'll step in and say I didn't realize why the interest rate spread was so narrow. That part was an eye opener, which is it's fun to having a panel members that are smarter than I am, for sure.
And willing to dish and willing to tell you.
Yeah, no, I think what's been great, that was kind of neat because there was a lot of back and forth on the panel. And I think that's from years of trust that we can disagree with each other or bring up different, scenarios, and that makes it fun. But when some of those people with a lot of experience start saying things, Doug Duncan had me in front of Raphael Bostic, who's one of the people that's, a big name in the Fed. So I had a one-on-one meeting with him. That was pretty cool, but that was over my pay grade. That was because of him. So I think that there's some things that he knows in his mind that I probably don't. So that's what's fun to bat it around with him, and him knowing that there was no buyer at that level of, the spread was so big because there wasn't a buyer at a less of a spread. Okay, that's interesting to know. So then you have to think, okay, well, when is that going to change? And so.
Craig, what surprised you?
I think the biggest thing that surprised me was, despite all that we've talked about with ADUs, there was a lot of people talking to me about ADUs and how to finance them. Despite talking with Cornelius on the panel, and even beforehand, he and Bruce had a good conversation about that nobody has really even thought through how to implement what is going to take place because of the ADUs and where's that going. And so I was honestly, I was quite surprised to see how many people were ready to jump in, despite kind of some of the uncertainties and the unknowns that are in there with the ADUs, that's coming out. That honestly, that surprised me.
It's gotta be a culture shock coming from Florida.
I just thought of sort of a correlation. So, Craig, have you ever dealt with lease land?
Yes.
Okay.
We've got some of that here in Florida.
Okay, so in Palm Springs, this could happen. Actually, did happen. So I bought 50 building lots, but I had a subleasehold interest. So I didn't have the leasehold interest, I had the subleasehold interest, but there was also somebody that had fee simple interest. So when my title policy showed up, on the fee simple interest, there was a $13 million first trust deed. Did that affect my level of ownership? No, it did not. You could have had a loan to the land lease. That would not have. You could have had 3 loans. You could have Bruce Norris own the subleasehold interest, and I would not be impacted by the other levels of debt because they could not pursue my level of interest. And the reason I'm bringing that up, can you imagine this scenario? I have a free and clear house, or let's say I have a mortgaged house in Riverside, and somebody builds an ADU, and now we can deed that to them. Well, that means they can borrow money on it. So you can have a first trust deed on the owner's portion of the house, and you can have a first trust deed on the ADU in the garage, and they don't conflict. But that's weird stuff, right?
So
creative.
If they foreclose on the garage, can they come after your main
no,
residence?
No, it's a different ownership. Just like that's why it took a lot. We were selling these lights, trying to explain, you don't have to worry about that $13 million first trust deed. It's not on your level of ownership. That's a lot. That's a lot to tell people,
So
was crazy.
So my other question about I Survived, what was the highlight for you? And you don't have to say it was my speech.
Well, of course it was, though. And you know what? It touched so many people. So that was the highlight. Coming in maybe a distant second was the gentleman from the military that, gave a heartfelt talk, and he was nervous, and what was crazy is he apologized to me for doing a bad job while he's getting a standing ovation. And I went, no.
I must have run into him 5 more times that night. And every time, I'm so sorry I went over, Joey. I'm so sorry I went over.
At the end, the standing ovation, it was very kind. I think that was kind of a thank you for all the years of us bringing value to an industry,
Yeah.
That was very cool.
Craig, what was the highlight for you?
Yeah, I definitely think the gentleman that spoke that was from the military, that I've got a lot of military in my family, and military background from our family and my wife's family, and a lot of friends. So it was very sombering to hear and see him trying to keep his composure to get through that, but to see his heart for his brothers and sisters that are going through something that most people will never know and understand. It's easy to talk about it and have talking points, but most people don't understand the demons and the wars they wage in their mind. You guys have gotten to know me enough over the years. I wear my sometimes I wear my emotions on my sleeve some, and it was I enjoyed that he got his time, he got the opportunity and the time, and everybody listened with bated breath to hear what he had to say. I appreciated, Bruce, that you brought him up, and obviously I know the backstory of that, and that meant a lot, because I've known that story from you for 4 years now, of how you even came to know this gentleman that was there that night. But that whole process was very special for me. I was excited to see that, knowing it was coming. I did not know all of what the gentleman was going to say, so it was a great moment.
Now, I've been carrying around that other coin or medal for about 10 years. So I gave that to his daughter. So now I have his medal. I just can't get rid of these things. Well, for him, it was on top on his list.
Mm-hmm.
So I've given that some thought,
Yeah.
I really have. What am I doing with this?
Yes.
It means that much to him.
Yes, absolutely.
Next time in California, I may chase him down and give that back to him. Because you know what? Who knows, man? He could be looking at this someday and save his own life, right?
Yeah.
Yeah, that occurred to me. It's like, so yeah, I thought about that. That's why we thought I thought I had lost it. And I'm looking all over. I'm calling Joey. Do you have it? I found it in a part of my bag that I hadn't looked in. I was like, I gotta find this. Oh God.
The thing that meant a lot from Bruce, when you told me about the first instance where the gentleman gave you his award, and of course the gentleman giving you that the other night. My wife's grandfather actually has Purple Heart, Silver Stars, a lot of awards that we actually didn't even know about until probably 3 years ago, because he doesn't speak about a lot of the stuff that he lived through, and the demons in his mind and stuff. So knowing what those things and the privateness that is to a lot of these guys and ladies in their life, I thought that was very special, and showed his heart for you and what you're bringing to the forefront of this. That I thought that was a very special moment.
Bruce has told that story to inspire real estate agents, real estate investors, that never forget that our business is a people business, and never forget about who you're sitting across the table with, and constant reminders that do the right thing above everything. That should be your overall, the driving force in your soul, is always do the right thing. That's the definition of integrity, is doing the right thing when nobody's watching. For me, the highlight truly was just seeing all the sponsors that have been there for years and years and years, and them just giving you a hug and just saying thank you for doing this again, and you got to find a way to do this again. We can't let this end. This can't be the last one. But the biggest highlight, Bruce, was the breakfast the next morning. After you had left, it was just Tony Alvarez and I, and Sabrina and Chloe, and he went on one of his stories, and it was like the real estate Forrest Gump story. It was, it was the longest story that I couldn't, I was like, each part got more and more and more unbelievable. And I was just like, oh my God, that's Tony. We got to get that on the radio again, because I don't think he's talked about it on the radio show. So I'll save that for that. But that was the funnest thing that I've ever heard. I was like, oh my God.
Well, what happened with the speaking in January is Buddy Rushing has this plan to do 2 or 3 things next year, and he's doing one on San Diego, and he really didn't have it, spoken for. So he asked me, because I had participated in Vegas for him, And he said, would I do that? I said, how about if I get Tony Alvarez and he and I'll do that. If he'll do it, I'll do it. So I called Tony, and yeah, so he said, yeah. So that'll be kind of fun.
Yeah, it was like, oh my God, like, Forrest Gump in the movie, it was like he's part of history, just by accident. And like it was this whole thing about, like I said, I'll save it for another radio show, but it was amazing. And that's just what Tony is. You can be talking about, his rentals, your real estate, and then he's been in the game so long that he goes on this just story, and it was just the greatest thing I've ever heard.
Craig, do you know how I met Tony?
No.
Okay, I spoke in front of an audience at the Apartment Owners Association, and probably 400 or 500 people in the audience. Somebody raised their hand, asked me a question on commercial property. I said, be honest with you, I'm not that familiar with commercial property, so I really don't feel like I should be the one to give you advice on that. Tony heard that and just said, wow, okay, that was all instant and automatic honesty. He didn't try to pretend anything. So that's why he came up to meet me. So when we met, he had 50 rentals, and he was going to sell them all. This is 2003. And I said, I wouldn't do that. And I'll tell you why. You have your rentals 9 miles away from a project I'm dragging my feet to build until 2004, so I can get done with it in mid-2005. And I think you'll miss a lot of the upside. So long story short, he made $3 million extra money. That's not why I'm telling you the story. I really loved who Tony was. And I said, have you ever spoken to an audience with real estate? And I put together a seminar where I had 4 or 5 different people that had very specific skills that they were going to buy in a different way than anybody else. And Tony was just friendly. He made people love him. And so I put him as his last speaker because I knew what was going to happen. So he was kind of scared about speaking, and I kind of got him to think about a different way. He knocked it out of the park. And I'm telling you what, people lined up for a half hour to hug him. That was the reaction of the audience. And I knew that was coming. Mike, do you know who Mike Cantu is?
Yes.
Mike Cantu. Okay. Well, he was one of the speakers, but that was on a different, how he did it. And he told me at the end of the day, he says, thank you for not having me speak after Tony.
Tony, I guess I met him, I don't know, 3 years ago. He has been an honor and a pleasure to know. Always an honorable man in everything he does. So
yeah, he is a great guy. Really like him.
Well, guys, we're up against it. It's time flies when we just start talking about anything really. So want to thank everybody for joining us again. For Bruce Norris, Craig Evans, I'm Joey Romero. We'll see you next time.
Okay, thank you.
see you. Bye-bye.
For more information on hard money loans and upcoming events with the Norris Group, check out thenorrisgroup.com. For information on passive investing with trust deeds, visit tngtrustdeeds.com.
The Norris Group originates and services loans in California and Florida under California DRE License 012-19911, Florida Mortgage Lender License 1577, and NMLS License 1623669. For more information on hard money lending, go to thenorrisgroup.com and click the Hard Money tab.